But I'm Garrett, this is Joe. We've been, I guess, formally with KW in town for about a year now, right? Yeah. Preferred sponsor, coming up on a year. Informally, we've worked with, a couple of the teams, definitely CCL for the past few years where we come in and kind of just do financial reviews, and all that for the past few years, but we're financial planners, which means a million different things to a million different people, but I guess that's new too. Have you guys had any experience with financial planners before in the past? Know what we do?
Just a personal accountant, just an accountant. Who keeps telling me I need a financial plan. Yeah.
So the accountant doing taxes.
Yeah, just from taxes, yeah.
Well, if you were to take a stab at what we do, how we operate, anything like that, what do you think we do? What do we work with folks? Just out of curiosity. No random answer to us.
Good.
Yeah, I would say strategies.
Yeah.
Strategies, guides, right?
Yeah.
Why did your accountant suggest in terms of?
Well, because of what I was spending in terms of my costs associated with my profession, a lot of that stuff could be done differently.
Yeah.
I invest, I have a couple of rental properties with my mom. He thought that it would be best for me to kind of create a holdings company where I can kind of my business, one LLC, my rental income could be under another LLC, just kind of separating those lines of business to where I could take advantage.
Is everything on under one umbrella right now?
Yes.
Yeah. So probably called, right?
Yes.
Okay.
Yeah.
Organization. So
100%. Which is a weakness for me.
that's exactly what we do. It's organization. People hire us to really take advantage or figure out everything really with the dollars associated with it. So all businesses, income, expenses, really anything associated with the dollar sign is kind of what we do. But really, to your point, we help create strategy for for people. So where you are today, where you want to be, and let's try to fill that void, try to fill that gap. And Joe and I, we really specialize in working with people in the real estate industry. So working with real estate agents, realtors, people with real estate portfolios, flippers, developers, you name it, but business owners in the real estate industry is our specialty, which is really why we partnered with KW, because we wanted to bring a lot of this information to the mass audience, and not many people do what we do. So we just wanted to kind of formalize things and make sure everyone in the right direction. But I guess before we hop into this, anything in particular that you guys wanted to touch on today? Any questions that you have besides interest for your jobs?
Yeah, just you want to go first or?
And what are your names, by the way?
Atanu or new for sure.
New.
Yeah.
Okay.
Abdul.
Awesome. So what were you saying, sorry?
Oh, I don't have any questions.
No, okay.
So just talking about different structures, right? I had dinner with Frank and he was definitely LLC your stuff, but then within the LLC, I know that we're required by the Pennsylvania bar to register the LLC with them, and just kind of, you could help us out or my question is structurally, what are the basic fundamentals that everyone should have if they're a service provider in this country?
So we'll go over the basics. Specifics is probably more so let's meet, connect, and talk more specifically on all right, if you're an LLC with an S corp collection, what does that look like specifically to your situation? But we'll go over the basics today. Anything else?
No, same thing, because I do flips, buy a whole property.
Okay, cool.
So the more information I can get with.
Cool. Awesome. Tom, you want anything? No?
Nah,
You're just here.
I'm just here.
Yeah.
I'm really sick of it again.
Tom's listened to this probably 3 times today. He's gonna
It's different every time, so it's.
It is. This is similar to what we did, when was it, 3 months ago? On Zoom. It was right during March Madness, I guess. Right? Yeah.
Yeah,
Everyone was so busy on March Madness. But,
Yeah.
to that point though, we do work with, a lot of realtors here and some of the things that we hear, it's funny, like, right now, spring, summer, things are crazy right now. You're crazy busy running in a million different actions. Some of the feedback that we get is saying, hey, listen, like, I'm too busy to focus on this stuff right now. And then those same people fast forward to like fall, winter time frame. Those same people say, I don't have anything right now. I don't have any closes, I'm not making any money, how can I start planning this stuff? So there's not a perfect time to do this, as good as everyone can really get set down, work, like, the business, not necessarily in business. I don't know if you, do you wanna add anything to, like, we all,
I think that clarified it well.
Okay, cool. So we'll talk a lot around like business strategies, business structures, basics today. And sometimes when we're kind of going through this, we get some hands that go up and say, hey, listen, I really need help in this area. I really need help. Someone that's used, like, we can kind of connect afterwards.
Right.
Or if you do have any specific questions, like, but anyway, we can kind of go through this. This is really what we'll talk about. So like building a basic fundamental financial plan, protecting your finances. So really the difference of like a W-2 employee versus 1099 employee, so business owner, like everyone here is. Is anyone here full-time realtor, or maybe work a full-time other job and then part-time realtor? No,
Full time with it.
full-time, okay, full-time. Yeah. I know there's a lot of people here that they have another job and kind of doing this on the side. Doesn't sound like it does in that. Bill, just protecting your finances, kind of best practices, tax planning, growth and scaling, is kind of what we'll review today, but one of the big things, and you kind of mentioned this, is like thinking like a business owner for your business. So a lot of the real estate agents that we meet and work with, they're operating as a sales professional, and they're not operating like a business. And if you create certain structures that gives you likely a little bit more freedom in certain areas. So more tax efficiencies, more time efficiencies. So we always recommend people operating more like a business, but then also thinking about, like, don't think about your next commission check, don't think about your next split. Plan for the long term for your business, and create structures today to help not only today, but also in the future. So that's one of the first things that we like to kind of hit on with people. And then this, I mean, we could spend like the whole time just on this slide here. But it's not me if you guys have any questions. Again, I won't just want to talk this whole time, but building financial security. Does any I know I've felt like this in the past, but some of the people that we've worked with, and Joe kind of chime in, through KW, they're kind of working towards their next paycheck, and it almost feels like you're paycheck to paycheck, commission to commission, and you're working towards that next sale. Has everyone felt like that? Everyone, yeah. So one of the things that we like to preach is, how can we overcome that? Let's overcome that by having just enough in savings. But not only just savings, having savings in your business account, but then also personal accounts. So your business account, those are things funding your business, but then also funding taxes. We just worked with someone, I think she was making what, like, last week she made like $250,000-300-ish thousand. The issue with that was she did really well, but the issue was she actually spent all that money. She spent $250,000-300,000. And so come tax time, when she was filing taxes last month, she didn't have nothing to put towards taxes. So we had to set her up on a payment plan, and what happened was that's not driving up her monthly expenses.
Sure.
Because now she's putting money towards the IRS each month to pay down that tax debt. So we always encourage people to, you're not working at like Comcast here.
Right.
You're not a W-2 job, so if you're making $100,000, that whole $100,000 is not yours. You're getting paid that, but you should always peel off some money. Just put that in the side business account. And that business account is funding taxes, but it's also funding business expenses. The personal accounts, that's funding your personal life. Funding all your rent, mortgage, groceries, utilities, all that stuff. So building out what 3 to 6 months worth of expenses, right, in these areas. To make sure that you have enough reserve to avoid that like paycheck to paycheck type dealing. This,
So just using her as like a case study, right? Did she have structure set up to where the commission was paid from the brokerage to her LLC, and then the LLC was paying her a salary? No,
not before we met with her.
Got
Now, yeah.
right,
But she didn't have any type of structure. What she was making was getting paid to her, then she would just turn around and spend it.
got it.
So there wasn't any formal structure, so we helped her, one, get the expenses in line.
Right.
Which is the big thing, looking at cash flow. And then two, create some type of structure where the brokers would pay the business and she would pay herself.
Got it. Got
Are you on payroll right now, like you pay yourself?
it. Yes. Mhm.
Any other questions follow up to that?
No.
No. Yeah, so prior to working, she had zero structure, it's just more stuff,
Mhm.
and it wasn't perfect, but so we always recommend allocating a portion of these commissions to these individual things. Portion should go into business savings, portion should go into tax buckets, and then a portion should go into personal reserves. Next thing, again, everyone here is a business owner. If you're working in Comcast with a W-2 job, you're getting insurances through Comcast. You're getting health insurance through that. You're getting disability life insurance through that. The issue with being self-employed is the onus is off of the employer. There is no employer providing these benefits, so it's all on you. So you have to go out, find health insurance, find disability insurance, find life insurance to protect yourself if something happens. We found that a lot of realtors don't have these insurances in place. So if they spend the night in the hospital or they go to the doctor, they're getting hit with a massive bill because they don't have health insurance. So one of the things we look at is, all right, do we have the insurances in place? Do we have health insurance? If you're not able to work, what happens to your income? Does your income get cut? Does it go away completely? So do we have disability insurance in place? You God forbid die. Do you have a family, do you have a spouse that needs income to get kicked off? Provide them some kind of benefit, so that's where life insurance comes into play. Also, estate planning, do you have a will, do you have a trust, basic estate planning documents? Have you worked with an estate attorney? You can see those. These are doom and gloom things, but oftentimes we find that no one really has these in place. So this is an area that we typically start with people saying, hey, listen, what type of protections do you have in place for your finances? Right? You want to add to that?
No.
You have to start talking here a lot, so I'm gonna take a bit of water. This is kind of what you were talking about here.
Yes.
Some sort of structure. So people come to us and say, all right, well, I'm getting paid whatever I make, 100 grand, 200 grand, whatever the difference can be. It doesn't matter. I'm getting paid this amount. How should it be paid to me? First off, we like to create some separation. So don't commingle funds, personal and business. Don't commingle individual business funds.
Right,
If you have a lot of business entities under one entity, it probably makes sense to separate them.
yeah,
But don't commingle those. Things should be separated for legal and tax perspectives, but then also just like mental clarity. You know that this one business is this business account, this is what this business is generating. These are my personal funds, that's this business, so on and so forth. It kind of helps create some type of structure to your plan. But you can also choose like an LLC and S corp, certain structures with your plan, that might be more beneficial to your taxes than others. If you do have an LLC, creating a business bank account, so a bank account in the business name. So XYZ LLC, creating a bank account then. If you don't have an LLC yet, it was just encourage people to like open up a bank account in your name, but designate it in your head as the business. Like just operate as the business. Again, by doing that, it's just gonna create one. And make things more black and white.
question.
Yep.
So I was told, and I don't, again, you guys are the experts, that when you do create a business account, it's preferable to go with a smaller, more regional bank as opposed to one of the larger ones.
Yeah.
The reason being that the relationship that you form with a small regional player pays dividends when you go, and let's say you want a line of credit.
Or something.
Exactly. What is your philosophy on that? Agnostic, or
Yeah.
does that have any truth to it?
Yeah, I think it does have truth. So credit unions in particular, so bigger banks, they don't really do like lines of credit, like HELOCs, like the Capital One in particular. I don't think they do HELOCs. I don't think they do lines of credit for businesses. Whereas you have to use a credit union for that. But I always like using credit unions because all the money you have at that bank, it gets invested back into the community. Whereas if you're using a PNC, a Capital One, it's like a big corporation everywhere. So the money sitting there is getting invested internationally as opposed to in your community. So, but yeah, there's something to be said with having the relationships. I don't necessarily think it helps or hurts having those relationships to get approved for those loans. Because most of those banks, they have certain lending standards. And if you don't meet those standards, it's probably not going to give you loans.
Sure.
Does it help? Maybe a little bit, but it definitely doesn't hurt. But you typically have to go to like credit to get this lines of credit.
Okay.
Like your experience.
No, I mean, like I said, everything's kind of been in one collective basket. Now I'm looking to be smart. Be smart. Yeah.
You can do that.
Not really, I mean, from my experience, it made a huge difference, I'm a little bit more agnostic.
Okay.
Yeah.
Okay.
It really doesn't make, I always like having the credit union that, just again, because like. They're investing the money back into the.
Right.
They're investing, they're taking your money and investing in the whole local business, giving them that capital. Whereas again, PNC, the capital money,
Right.
but.
Okay.
And all of that.
Cool. This one.
So this, do you have an S corp election?
I do.
To the LLC, does anyone else have an S corp?
Just it,
You
just
have an
LLC.
LLC, just an LLC?
Yeah.
Why were you instructed with the S corp?
Protections.
Protections? So create the LLC with the S corp election for the protections, any other reason?
Taxes.
So that's really the big one, and Joe can kind of speak to this, too. If you really, when we have over 80 grand, if you make over 80 grand and your business generates that, it likely makes sense to have the S corp election, because then you could set yourself up on payroll and you could save a lot from a self-employment tax. So it's really beneficial to have that S corp election. If you make over 80 grand, under 80 grand, there's not too much of a tax savings. Maybe you're just doing the LLC, just to limit your liability. Limit your liability, creates separate like buckets for personal and business buckets, but over 80 grand, really utilizing that S corp election where you of that, because you get a lot of benefits. But then you put yourself on the payroll, so you're paying yourself through payroll, so that even though I was referencing earlier, I mean, she's making 200 plus grand. She was really a good candidate for this.
Yeah.
This should have been set up a while
Yeah,
ago.
yeah,
But now she knows each month, so we went through her expenses, she was spending, I don't know, what she was spending each month. We went through her expenses, now she's paying herself that each month, one payroll. It doesn't matter if she's getting paid 20 grand that month, or she's getting paid 0 grand that month, she's paying herself through business, she's accumulating a lot of money in her business account now, which eventually will be used to help offset any potential future tax liability. But the payroll should help, should pay for all her taxes really. So when she files taxes next year for 2025, she'll likely be good from taxes, she might still be cleaning up.
question.
Yep,
So with the S corp status, right?
Yeah.
So. What I've kind of in my mind envisioned is the money that is there in the business account, I would like it to be generating. Revenue, right?
Yeah.
I don't just want it sitting
Yeah.
in the bank and earning nothing,
yeah,
basically nothing, right? So am I able to then create like an investment LLC for that, for my business entity that invests
Yeah.
in different, equities or, like I'm a big real estate guy, right?
Yeah.
So I like, crowdsourcing
yeah,
investment right now, like Fundrise.
Fundrise,
Yeah, exactly,
Yeah.
like, is that something that I could be doing?
yeah. You wanna answer that, and I'll repeat that, what you said?
Yeah, I mean, simple answer is yes, that you can have a separate account that's in the name of the business that you're purchasing. Different types of investments, could be just a high yield savings where you get some interest as well. But yeah, you can do that, and
Okay,
usually that's what we're having conversations about, is what's the minimum amount of cash you wanna keep in that main
Yes.
operating business account? Then anything above that, how can we maybe put that to work?
got
Either keep that in the business, maybe we're moving it over personally. Cause at the end of the day, everything, all the money, whether you keep it in the business account or not, you're paying taxes on it and it's flowing through to your return.
it, exactly,
So we wanna put it to use.
exactly. Exactly.
I would say you just have to get, piggyback on that, you just have to get laser focused on what the goal is of that money.
Right,
If your goal is to use that money in 6 months for taxes, when taxes come up, you should probably be very conservative with where you're putting it. So a high yield savings account is probably perfect for that.
right,
Get 3-4%, whatever the rates are at the bank that you use. If your goal, if you say, hey, listen, I don't need this money for anything, it's kind of just sitting in this account, I don't really have any design, like, I don't have any big purchases, I'm not planning for anything. Then I think it's perfect, where maybe we open up like an investment account in the LLC's name and just start pouring that in, or maybe we're just bonusing you money out of the business account. And then just investing it personally, so.
see, I've learned, and this is just me personally again, it's like, cash is problems, right?
Yeah.
Like, everybody wants a piece of your cash,
Yeah.
when, like, so I'm trying to avoid cash and putting it into assets, right? So I'm at the stage in my life right now where, like, the biggest event is gonna be like retirement,
Yeah.
right? So I'm really just focusing on building, just tossing money that way as opposed to, cause every time I get like a lump sum of cash, I get in trouble.
Yeah,
One way or the other, right? So it's like,
if it's there, I'm spending it, if it's not, I'm not,
yeah, exactly, exactly.
Yeah.
So like, I want it to be so where, like, let's just say a commission check comes in from 200.
Yeah.
Let's call it 200. that, you know, I know what I'm getting,
Yeah,
you know, in terms of payroll, I'm comfortable, I'm covering my overhead.
yeah,
You know, there's a certain amount that's going towards taxes, that's one bucket. But I want the majority of it going to use for,
yeah.
exactly.
Have your we'll touch on this later, but has your CPA kind of, told you about retirement accounts? Have you gotten it?
Yeah, but I, you know, like 3%, just like
Yeah,
bothers me when I'm working with commercial investors that are making 9%.
Yeah.
So again, I'm not gonna, you
I'm
know,
talking about rate of return.
yeah, so I'm like, alright, let me get into the game, but, you know,
Yeah, so, I mean, one thing, if your goal truly is retirement, we can talk about it offline too, but like. You should have a retirement account for the business, and one, I mean, you get to deduct that off your taxes.
that was
So,
one thing,
that's, I mean,
huge.
massive benefit, so if you're 25-30% tax bracket, then you just get the so right
No
there,
limit,
it's up to 70 grand.
okay,
It's 25% of your revenue, it's the lesser of the two, 25% or 70 grand, right? Yeah,
okay,
they keep increasing it every year, but, so right off the top, you get to deduct our 70 grand, so
huge,
when we talk about rates of return, like that's a huge savings right there
yeah,
that you're getting, that you wouldn't otherwise get, so you're saving 25-30%. But then also, like, you can invest in like account, so you can get, I mean, the market's historically gotten 7, 10%, like, you can invest in like market asset at 70, 9, 10% invest in.
right,
So pretty good rates of
that's
return.
pretty good,
Yeah,
yeah,
if you're just investing in the market. So, I'm looking at one of those. We can talk about that offline.
okay,
And. But a lot of what we do with folks, connecting with the CPA that they're working with. And we're just getting involved with the CPA and saying, hey, listen, what do you think about this? About that? Should we open up a IRA through this business to get a mass deduction and so on and so forth? CPAs are really worried about taxes here and now, which is great. But they're not necessarily worried about the long-term, like longevity of your financial plan and your assets. That's really where we come in, when we say, hey, listen, this is gonna help us today, but also like, let's think about this in 30 years from now too. Because today's important, but also 30 years from now is important, so we need to kind of balance the two. And we don't wanna just do something today that's gonna screw us up back.
got it.
So there is like some stuff that we should pick up here, but,
Another question.
Yeah.
When we buy real estate, let's say it's just single family,
yeah,
whatever, should that be its own LLC held underneath the business account, or is that its own separate entity that
yeah.
does its own thing?
I mean, you may have an answer, this, it depends. It depends how you're currently structured, if you're financing it, or if you're paying a full cash deal, if you're.
Assume financing, because that's the most difficult.
So if you're a new LLC, then you're probably not gonna get financing,
Right,
right? Because your bank doesn't have any track record.
you need
for that
3,
LLC.
right?
Yeah,
Minimum of 3?
so. It depends how old the LLC is, it depends the track record of the LLC. I like purchasing it within the LLC if you can. But, you know, there's a lot to consider.
Got it. Abdul, how do you purchase yours through an LLC or?
My properties,
Yeah,
Yeah,
through an LLC?
it's one other thing.
Yeah.
yeah, I like through the LLC, if you can do it. If you hold properties personally, it might make sense to like redeed them, but
Okay.
depending on kind of the specs of the property, and probably just as fine, but personally.
What if you're a limited partner in a bigger piece, like in a commercial piece?
Yeah,
Do you structure that differently as well?
so you're buying it through your piece through the LLC.
So I'm foregoing a commission check and you getting equity in the deal.
Gotcha.
So,
Yeah, probably first. Now, a limited partnership, like, it's already limited your liability there.
Right,
So in purchase of through the LLC, if like, you're kind of getting property protection, whatever it may be.
it'd just be more convenient to just keep it,
Yeah.
okay,
But again, like, we're getting into like, there's a lot of gray area in the tax code,
yeah,
and like, how can we use that to your advantage?
exactly,
And like, a lot of this is like specialized, like, individual plan, so a lot of these questions might be like, alright, let's. Where everything is, what the equity that you're getting for this partnership is, and how should we.
okay, cool,
Yeah, better answer that.
I mean, everything is personalized, but I mean, if it's through a limited partnership, your only risk is the amount of money that you're
Yeah.
putting into it,
got it,
right? So you probably don't need an LLC on top of that.
got it,
Obviously, we're not estate planning attorneys, but, it could make sense,
Cleaner,
yeah.
to keep things cleaner, it might make sense to do that, but from a liability perspective,
We're not too-
it's no difference.
Got it. Does it make sense from a structure standpoint to have, when you're like diversifying out like that, does it make sense to have a holdings company that kind of aggregates all of it? No. So you don't really see a value to a holdings company and trust? No, okay,
Maybe a trust at some point, it depends how big your estate is though.
gotcha,
If your estate is over a certain point, then maybe we're starting to put things into a trust.
got it, got it. When you have various like operating companies, is there a certain threshold over 3? Like,
I think it could help from an organization standpoint.
Yeah.
A lot of different countries and different legal LLCs. Have a holding company on top of all them, and then you can make that holding company an S corp too, and pay a salary as well. But you don't want any of the real estate to be in their own S corps, because it's not good from a tax standpoint.
got
So there is some tax benefits and some tax benefits, I think, when you start to really build up that real estate portfolio,
it.
that's when you want to start thinking about some of those additional strategies.
Okay, okay,
Yeah, I have, one client, couple has been applied, I think they have like 400 units.
mhm,
And their portfolio, whatever, $20 million. And I mean, they have, it's like 7 different LLCs
mhm,
that their new purchases, they're pretty much like dispersing within these LLCs.
mhm,
But there's not one big holding company,
mhm.
just because there's not a ton of benefit for them, and they're not good at managing everything on the back end, so they don't need like the kind of clean lines, but yeah, there's kind of a place for.
Okay.
So,
Okay,
the trust though, they're at the point where we're doing one of the trust work though, and we're starting to put things into like a trust and kind of develop that strategy for them.
got it.
Cool. Any other things? Got any other points you wanna add? No?
Can you go back real quick, just
Yeah.
real quick, about the feast or famine cycles? Like, that's like, I mean, no one has a crystal ball, right? But like, when you say 3 to 6 months, one of the things that I learned from the pandemic, and again, thankfully, I've gotten a huge,
Yeah.
like, commission check at that time, which was able to help me carry. But like, 3 to 6 months that's kind of slim,
Yeah,
right? Like, so that's a minimum,
yeah,
right?
exactly.
Okay.
So, we typically like 6 months, but 3 to 6 months, yeah, that's kind of the baseline where
Okay.
if you're not there, let's get there.
Yeah,
6 months is like, all right, we should be fine here. Anything that happens, and again, we're 3 to 6 months of business and personal expenses.
gotcha,
So it's
okay,
kind of combined between the two. But yeah, like the pandemic, but also going back a little bit further, like 08, 09. Both real estate, like the asset went down, plus commissions went down because no one was buying any houses.
absolutely,
So it's really important to, yeah, I'm not That's a fire right there, launch right there.
I don't need to see this, man.
By all means, I'd be impressed if it's that whole.
No, this is just a.
Yeah, first round, go to sleep.
I'll also add to that on the emergency fund. It's gonna be based on a lot of factors in your life, like is there a spouse who's also earning an income? So how many income streams are there?
Right,
Do you have real estate properties that are gonna be spitting out income covering your expenses, and then maybe we're going a little bit lower? That's the case too, so just looking at the full picture.
understood.
So that's bare minimum.
Yeah, so if you have a spouse that's working, just a normal W-2 job, that's pretty stable, or, you know, nothing's happening. To Joe's point, yeah, we have to be at that 6-ish month, maybe a little bit. Because your business income is not reliant on just paying monthly bills. You don't have to do all this stuff yourself. There are a lot of resources out there for really anyone to utilize, tracking expenses, kind of doing books for you. So, we always like credit cards, like use credit cards, get the rewards, but this also helps track your expenses. So if you have an LLC, get a credit card in the LLC's name, and then use it. Use it to track expenses, don't keep a balance on it, pay it off, but, use it to track expenses on a month-to-month basis, get the rewards. But then also use all the, other like bookkeeping softwares like QuickBooks, Realty-Zan, which you're high on, right? Like there's a lot of things out there to help you do this so that you can just be more efficient in your business. Is anyone using any of these softwares for bookkeeping? QuickBooks? Yeah, that's a like a big one.
Yeah.
Realty-Zan, I think like a couple folks use that, right?
Yeah.
Yeah,
A couple realtors I talked to,
yeah.
Is it more of a friendly interface, or is it just like some templates that they use, or
Yeah,
what do they like about it?
more geared towards real estate agents.
Gotcha.
I know they have a cool feature, like it's free for 3 months, and then if you don't have a sale by then, like it continues to be free. So like, there's a lot of, I think, perks for realtors. So it might be worth, maybe not worth checking out if you're already set up and you don't want to mess with it.
Yeah.
But I mean, it's cool
Yeah.
to see what's out there.
Yeah,
Yeah. But yeah, there's a lot of things there and that helps you carry over to maximize your deductions.
We also had a QuickBooks, I'm not sure if we still have it, but like there's a group like discount. And we had like a bookkeeper at one point too, and they were giving agents like 20% off. But we're like a discounted back package.
There probably is a discount. I don't know like KW in particular, but a lot of like discounts, where you can.
With vendors.
Vendors go through that, utilize QuickBooks, yeah, so.
Gotcha.
Yeah. But, I mean, anything that you like are tracking, that's helping with your deductions, so maximizing your deductions. It's good that you're using a CPA. How many people do use CPAs, which is
I'm in my list. That first IRS like notice, I was like, oh shit.
I know.
Never
It's a
again.
nightmare. It's a nightmare, so, but make sure that you have a detailed book of everything, you know, you just pretty much provide to the accountant and say, hey, listen, here's my situation. Here's everything that's going on. Not many people think about this though, the retirement contributions that we were talking about, that's a massive deduction that's right in front of you that you can use. For your business, so up to 70 grand if you're making a decent amount of money. But then also, Joe, I don't know if you want to talk about this, but the real estate professional status, specifically if you hold real estate and you're a realtor, it's a huge benefit. Do you want to touch on that?
yeah, has anyone heard of that, real estate professional status?
I have, but
Yeah.
could you dive into it, please?
Yeah, definitely, I mean, it's something as real estate agents that you guys should fully take advantage of. And it relates to your real estate investments. And as you guys probably know, one of the biggest perks of real estate is depreciation, and being able to get that big deduction and hopefully show a paper loss, but actually be making money.
Yeah.
So as real estate professionals, you have your commissions that you're earning through sales, and then you have your real estate investments. If you show a loss in the investments, you're allowed to lower your commission income. as well, and then by lowering your income, lower your taxes, and that's only benefit the real estate agents get. The normal person who's a doctor making W-2 income can't reduce his W-2 income by his real estate losses because he's not a real estate professional. So it's something to keep in mind, and looking into depreciation strategies. I mean, if you work in commercial real estate, cost segregation studies are
Yes.
very popular,
Huge,
and that could be something
yeah.
either you're talking about with people or taking advantage of it.
Well, do you utilize that at all? I know you're flipping more, you know.
Yeah, I have few rental properties too.
Okay.
So, yeah, I think my current depreciation on my property. I didn't do my taxes yet for last year, so.
Extensions. They're beautiful
Get
things,
going.
extensions,
Go,
yeah.
baby, get going.
To that point, if you're not paying quarterly or if you're not on payroll, you're going to have payment penalties. So, it's really, it's really important to make sure you're at the very least paying quarterly taxes. So each year just sending in the IRS, just a check, or each quarter sending in, a check to the IRS. But if you're on payroll, then that should take care of your tax liability of when that's prepayment penalties. So make sure you're paying your taxes, maximize your deductions, take advantage of the retirement plans that are out there for you guys to utilize, and then also, real estate professional status. Here's a big one, so, again, like, people come to us and say, hey, listen, how can I deduct more on my taxes? Big one is just invest back in your business. If you have a business going, invest in stuff that's gonna generate a nice ROI for you. So lead generation, maybe an admin, probably doing a lot of stuff that you shouldn't be doing right now. Invest in an admin, invest in someone that's just gonna offload that work. So you can spend more time on the stuff that actually generates the money for you. High revenue generating activities. So this goes back to our first slide, thinking more like a business owner. How can you get more strategic with your time? From a time perspective, but then from a money perspective, we're gonna pay someone else that also carries over the taxes. And then, you know, I think you hit on this, but diversify your investments outside of real estate.
Yeah.
Right? This is a big one. We see real estate agents, all they own is real estate and your income's tied to real estate. So making sure you have different pots that aren't tied to the real estate if you're in real estate. Just like again, we don't wanna kind of deal with that situation, went through a COVID where just things shut down. You don't wanna have all your sticks and bricks, all your money's in the sticks and bricks, your houses, plus your income tied to it. So real estate is a beautiful asset if you wanna be in it, but it should just be outspoken, it shouldn't be the end all be all. We can spend the whole time just talking about that. So next steps, assessing your financial plan, just like where you are, where you wanna be, how to kind of get there, how do you create a structure or roadmap for yourself. But then also like looking at that on, I would say, at least an annual basis, kind of reassess things, but probably more quarterly, semi-annually. Things in everyone's life change, so it's important to make sure that the personal changes in your life, business changes, are kind of responding to financial changes. Like, shameless plug, but like consult with financial advisor, financial planner. We're huge proponents of just utilizing our people's strengths. So if you're putting together a financial plan, use a financial planner. If I'm selling or buying a house, I'm probably gonna use a realtor, right? If I'm doing my taxes, I'm gonna use an accountant. Same thing with estate planning, I'm probably gonna use an estate planner, a state attorney to draft wills, and trust and all that. So use people correct, consult with the people that are there for you to consult with all this stuff. And then final thoughts, I mean, avoiding the pitfalls, we can spend a whole hour just on that, we're not going to. But big pitfalls, not diversifying your wealth, we just talked about that. commingling personal and business ones, so things get kind of too blurred lines. And not protecting your finances, not having the proper insurances in place, and then being reactive. So we kind of talked about this right at the very beginning, but everyone's busy spending time in their business. Not a lot of people take a step back, like you guys are currently doing, and work on your business, kind of put some thought about how the business should be structured. Where if you have a game plan, when stuff pops up, you can be more proactive with it instead of being reactive. So that's what we had. I think that's it, right? Yeah, won't let me click any further, so that's it. Any other questions?
How do you guys get paid? Is it like a flat fee? Is it based on?
Yeah, so.
But you guys have your series?
Do we have our series?
Yeah, okay,
We have a lot of series, yeah.
the series 6, 7s,
Well, that's more financial
advisors.
and securities, isn't it?
Yeah.
Isn't CFA kind of like the?
So
I
we
mean,
have,
they sell life insurance products
Oh,
and
okay.
maybe other financial instruments, but they get paid from whoever's underwriting those products.
So we
Mass
have-
Mutual, right?
Mass Mutual, we have our series 7, 2 or 6? You 6, 6, 7, 63, 65, 66, all this series for securities. We have our life, so we can do insurances. But primarily with financial planners. So first and foremost, when someone comes to us, we'll probably put together a financial plan. We're probably going down this planning route, and we have a fee for that. The fee ranges based on the like scope of work, complexity, how many business entities, ultimately how much time is involved for that. And then through the financial plan, like we can do insurances, we can do investments, we can do pretty much everything. For clients that use us for financial planning, they use us for the other stuff. We can just kind of recommend those things, but 9 times out of 10, our clients that come to us that put together a financial plan and say, Jared, Joe, like it's just easier to keep things with you guys. So we'll just like implement those things with us, but so long-winded answer to your question, but it depends. Most of the time we're charging a fee for putting the plan together. There are some law cases that someone comes to us and says, hey, listen, I just need a life insurance policy. I just want to put this investment in place. That's fine. We're not going to put the plan together, so we're not charging that fee. And then we'll get comped on whoever is right the life insurance policy.
Is Mass Mutual a broker subsidiary, or you guys have direct products for your retirement plans?
So we work in capacity on insurances, investments. We don't use Mass Mutual investments, but yeah,
Are you employees under Mass Mutual, or Mass Mutual is a broker?
we're a business. How are we technically company? We're business owner.
Technically self-employed.
Yeah.
Yeah.
So we're all fine. We do get some money to it from Mass Mutual, but majority of
Cool.
So they get, so
So we're in
the
the same boat.
consultation fees and then the commission, like if they doing annuities on like their series, they could get a cut or commission of whatever is transferred into the annuity,
Right.
and then like if
Like
the
a
annuity
service
grows,
fee.
so they could even tie in some of their growth commission on how well the annuity or the financial instrument does, and then with life insurance, it's like compensation commission.
With the renewal.
And yeah, and every time they renew, it's like a residual.
Yeah.
We can't get any of the, we can't get comp. We're not allowed to get comp on growth, so like, there's hedge funds out there that would be like 2 and 2 is what they said. We're charging you 2% on your money, plus 2% on your growth. Those are hedge fund specific models. For us, like if someone's putting like an investment in place, new leasing thing, it's pretty much just an asset.
Got
So, and it depends on the size of the account.
it.
Generally speaking, we try to get someone at or less than 1%.
Okay,
So
that's fair.
that's if they're kind of going.
Right.
They kind of, first and foremost, we're building our financial plan.
That makes sense.
Yeah. We're not one size fits all, no, because,
No, I wouldn't expect you.
yes.
Are you guys doing IULs,
What do you ask?
the next universal life?
Yeah, what do you ask?
Yeah, because you do life in health, so
Yeah.
I'm wondering, like, who you're going after, Transamerica, Voya, Nationwide, all of them? Who are some of your direct insurance providers? That,
Yeah, so I mean, we don't do much
What does IUL stand for?
indexed universal life. There's. This might be a wormhole here that we're going down, but we don't do much of that, because. We
you believe in the separation between investments and insurance products?
pretty much, yeah, and we don't like the internal costs going up in IULs, and at some point, we're using this for cash accumulation and we're pulling money out of it. The policy might lapse on itself. So if we're doing that for cash accumulation, we're probably just better off doing something else, doing just an investment. And I don't necessarily love the cap rates plus the floors in those. If we're doing it for that, then we're better off doing it as opposed to that. But again, there's a time and place for everything. But if we are looking at that, I mean, we have what, like 50 or 60 different insurance companies which are out to. But yeah, I mean, there's. One bottle.
Thank you, guys. This is awesome.
Yeah.